Hello and welcome. I'm Suyash Maheshwari and you are watching First Tick here on News 9, where we bring to you the morning buzz on the Lal Street. Now, Indian markets have kicked off the final trading day of 2023 on a muted note, with the first tick for Nifty coming in at 21,737 mark. Now, the markets have since attempted to, recoup some of those early losses, but we are pretty much flattish. And as of 9:55 this morning, Nifty was somewhere around the 21,737 mark. So pretty much where we opened at. In fact, Sensex is also down this morning and it's down about marginally by about 0.14%. And the index is trading at 72,314 mark. The bid camp at the broader markets in general, now they started the day on a muted note. They have recovered all losses, and in fact both indices have since hit a new record high. Nifty mid cap 100 as we speak is up 0.17% at 45,893 mark, whereas the small cap index is still holding above the 15,000 mark, which it had closed above for the very first time in yesterday's session. India VIX, now that fell by about 3 or 4%. In yesterday's trade, we were at 16 sort of levels. We have given up, we have fallen about a point or so below that. And this morning also, it's trading about 1% higher, just above the 15.3 sort of levels. But don't let today's weakness overall fool you, because Indian markets have had a phenomenal 2023 with Nifty giving returns of about 20% year to date. Now the mid cap and the small cap, it's been a year for them, and both indices are up somewhere around 45 to 55% in the same time period. And overall it's been a rather eventful year for the markets. We started the year on a muted note, with January and February being the red months, and from there on we saw a good bit of recovery till July of this year. Now July was a time when we first made a record high for the year, and from there on some bit of volatility had set in. But since November, the only way the market has moved is up. And the bull run pretty much has been so strong since November, that the last 2 months have been the best months for the markets in 2023. And I think one of the bigger takeaways for the bulls from here on would be that we are not seeing any signs of slowdown. And the question now comes to whether this rally can sustain, and what awaits us in January, which by the way is a historically muted month for the markets. So those are the two big questions that we need to answer. And for that, let's also bring on board Mr. Ravi Singh of DRS Finvest. Hello, sir. Thank you for joining us here on First Tick. Now, overall, 2023 has been a phenomenal year for Indian markets. But looking ahead, January, which I just mentioned, has been a historically red month for the markets. Do you expect some bit of a pullback over there, especially considering the kind of returns we have seen over the last couple of months?
Yeah, definitely. You are rightly said that this year remain very positive, and we are achieving new milestone in 2023 in terms of volume, in terms of Demat account, in terms of IPO, in terms of performance. And also NSE reached out around $4 trillion market cap, surpassed the Hang Seng as the world's 7th largest exchange. So Indian market have so much potential, and I'm expecting next year performance. Definitely we may see around 16 to 18% in the end of the year, and in first 2 months in January and February, this bull run will continue.
All right, and Mr. Singh, for the year, Bank Nifty has rather underperformed Nifty, but in December we are seeing a bit of a catch-up rally in the banking pack. Do you expect this rally to continue at least for some more time?
See, without banking sector, we can't expect that so much aggressive rally in next year. So my point is that now overall the financial changes are going on. So we expect the same kind of aggression in Bank Nifty, and Bank Nifty we may achieve the 50,000 target very soon. So in next couple of months we may see 2000 point rally. So that kind of potential they have in Bank Nifty. So the upside target is open.
And India VIX, now that is above 15 levels and pretty much at a 9-month high. Is that concerning?
That is a good sign, na? Because when this type of volatility, that means we are expecting some upward momentum or some downward volatility is also is the indication. So if stable the 14, maybe the average is settled down around 30 to 14%, but this type of volatility is a positive sign for the market.
All right. And Mr. Singh, moving on to stocks, Tata Motors. Now, that was the best performer among Nifty 50 stocks. The stock has pretty much turned a multi-bagger for 2023 year to date. It's up somewhere around 95-96%. Even trading with a good bit of strength this morning, up about 2% or so. Can this rally that we have seen in Tata Motors that has played out this year, can that continue?
See, the daily and weekly chart is also in a bull side, and yeah, you are rightly said that in 1 year he's reported 96% return, and 3 months is 23%, 1 month is 8%, and 1 week is 6%. So this stock is outperforming the Nifty, and we may expect the same kind of movement. And in next target would be the 950 level. So all the investors, those have a position on Tata Motors, they will continue and put the stop loss at around 680 levels, and for the target of 950 level.
And so what's your view on HDFC Bank? Now that stock was a laggard for the majority of the year, but since November, we have seen a good bit of a bounce back in the stock after, it formed a base around somewhere around 1480 to 1520 level. Now the stock has in fact moved above 1700 levels. Has the stock first of all bottomed out, and can we expect more upside from here on?
See, the lot of news is going on in this counter, and yeah, it's surprised that this stock has delivered 3.75% return in 1 year. And if you talk about Indian benchmark indices, then this stock is underperformer. But the overall situation is now the change, and we may see upward momentum. Yes, definitely this stock is bottom out, and once it's crossed the 1750 levels, then we set to the target, maybe achieve in 2100 for near term. So the bull run start in this counter. So we may take a buy call on this and put the stop loss of 1600, and we may expect that in next 6 to 8 months is 2100.
All right. And Mr. Singh, before we let you go, any short-term trading ideas?
Yeah, lot of stocks are volatile, and this point of time, I'm selecting 5 stocks for the next year. You can say that, and on short-term period or long-term investments, but the target is short-term. First is a buy BHEL at 192.93 levels, and for the target of 205 with a stop loss of 185. And second is a GMR Infra. The chart structure is very good, and we may expect the target of 85. So we can take a buy position at current level at 73.75 for the target of 85, and put the stop loss at 71. And third stock is IOC. Right now is trading around 132. You can take buy position on this counter, and for the target of 145 with a stop loss of 125. And and second is Tata Power 328. We can take a buy position on this price, and for the target of 345 with a stop loss of 320. And last but not least, the Tilak Nagar Industries 240 for the target of 270 with a stop loss of 230. So these 5 stocks we may take a buy side.
All right. Thank you for joining us here on First Take, Mr. Singh. Wishing you and your family a very, very happy New Year.
Yeah, same to you and your team also.
Thank you, sir. But moving on, we also have 2 very special guests in Mr. Avinash Gorakshakar and Mohit Gang, who join us now. Now, Mr. Avinash, I'll come to you first. We are in the final trading day of 2023, and what a phenomenal year it has been for Indian markets. We may not see 2022, 2000 on Nifty, but I think in retrospect, I think bulls will rather celebrate the kind of movement and the kind of strength the market had showed, since last Wednesday shakeout, isn't it?
Yeah, I think good morning, Swash. I think markets are definitely looking quite positive and encouraging, largely because FII flows have actually started coming back in a significant way. More importantly, I think our sense is that the third quarter numbers, which are expected now very soon, by the first week of January, you'll see a good kind of performance from most of the larger corporates, and specifically, from sectors like automobiles, auto components, capital goods, real estate, cement. So I think, markets are now looking forward for a good earnings trajectory for the second half of this fiscal year. And more importantly, everybody is expecting that in the new year, once Jan 22, the new, Prime Minister Modi inaugurates the Ram Mandir, we could possibly hear some electoral campaign being announced by the government. I think clearly a lot of flows are expected, from January as allocations get announced in the beginning of the year. And with now 3 rate cuts announced by the Fed governor, I think everybody is looking at the fact that a lot of foreign money would now come in emerging markets like India, and that would actually facilitate the sentiment as well as the growth momentum in the Indian stocks. So I think it's going to be a selective stock picking market, but I think broadly it's a market where I think any decline should be used as an opportunity to accumulate good quality stocks in your portfolio.
Now, Mohit, you are a registered investment advisor. But I think one of the best advice that came in 2023 was from from PM Modi, who advised buying PSU stocks back in August. And since then the PSU index has in fact rallied by about 37% or so. But on a more serious note, can this rally that we saw, the phenomenal returns that we saw in PSU stocks, can this continue stepping into 2024?
Hi Suyash, morning, and I think it's a lovely last day of the year. So look, I think just to answer you, you cannot take any word which comes out of the man lightly, and I think markets have taken it very, very positively and very strongly. PSUs have completely turned around, and if you see, I think banking is one sector which is totally evident in front of our eyes, the way transformation has happened, the way NPA cycle has turned around, the way bank balance sheets are looking now much healthier, much stronger, much cleaner, right? So I think on both levels, the gross NPA and the net NPAs, if you see from where we were in 2013 to where we are in 2022, it's taken us a long, painful cycle to actually get the net NPAs down below 1% at an aggregate level. And which is a transformative thing in a country like India, where a lot of new capital is borrowed every single day, and a lot of new funds are being raised, right? So I think banking is one sector where we can continue to be bullish. In fact, the overall PSU pack, as you rightly said, if the indications are correct, and if the government is coming back to power, the continuity of policies and the way government capex has been, I think PSU is one sector which will catch up with their private sector peers. In fact, I'll not be surprised if they come at par or almost near the private sector peers in terms of valuations. So my sense is, I think we should stay long on this trend, which is both the PSU banks and the PSU stocks.
All right. Avinash, coming to you. Now, we for sure have performed, Indian markets have performed, but 2023 overall has been a great year for global equities. Let's take S&P 500 for instance, that's a proxy for US stocks. Now that has outperformed Nifty year to date. It's up somewhere around 25%, whereas Nifty is up about 20% or so. But this is at a time or in a year in which the country saw the worst banking crisis since Great Depression. Interest rates are at a decadal high, and all through the year we have been talking about US potentially slipping into recession. So do you think that this rally that we saw in the US market, is that a big suspectful?
No, I think clearly, markets started the year with a lot of doubt and suspicion, Suresh. But I think as the markets went ahead, I think one thing is very clear that all across the globe, I think if you look at S&P 500, you look at the Nasdaq, I think very strong performances. And I think this has been supported by good corporate performances, from corporates in the US. And I think despite high interest rates, this performance has been quite strong. I think now the Fed governor mentioning that inflation is now within control, although it's still yet to come down to their comfort level of 2%. My sense is that once interest cuts happen from say April, May onwards, the markets would definitely get better. In fact, the cost of financing would also come down. So I think this rally is not suspectful. See, the markets always look at the future and don't look at the past. So I think the markets are now discounting better days ahead, and I think probably that could be a big sentimental factor at least for the near term. I think the narrative has started playing out. You will probably see concrete data points, from April, May onwards, which would give us a clear indication that the US economy is now back healthy and strong. And that is the reason I would not be surprised that we could see continued rally happening in the US markets and obviously in emerging markets like India.
All right, now Mohit, coming to you now. In 2023, we saw something very interesting, a dash for cash playing out, whereas where listed companies have raised nearly 50,000 crores through fundraising, which is, by the way, a six-fold jump compared to the previous year. But, private capex, that has still been lagging. Why do you think that is the case, and can we expect it to pick up come 2024?
Yeah, Shuyash, I think the year has been magnificent in terms of new fundraise. Look, honestly, I think around 240 odd IPOs during the year 2023, which is kind of a record number. And though in terms of gross mobilization by the IPOs, I think the amount is a little lesser than what we raised in 2022, but the number of IPOs I think is higher this year, right? So, look, my sense is basically in terms of new fundraise, given the way momentum is and given the way everything, the positive environment around us, we will continue to see a lot of new fundraise happening. I just lost your question, Shuyash. What exactly was your question?
My question was that we have seen good bit of fundraising this year, which is by the way a six-fold surge compared to the previous year. But private capex has been sluggish. So why is that the case, and can that perhaps pick up in 2024?
Look, I think, yes, I have mentioned in your show before that till now, whatever we have seen is all been fueled by government capex, which is public capex. Government has been fueling the infra growth of this country. Government has been pumping in a lot of money on railways, water networks, power. So I think it's all fueled by government thus far. But my sense is if you see corporate balance sheets, the leverage on the corporate balance sheets is at an all-time low. If you see the gross depreciation blocks on the new on the balance sheets, the new formation is actually very low, which means that the corporate balance sheets they haven't been any new private capex, and they aren't leveraged also, which means they haven't raised as much debt as they were raising before, right? So my sense is all this should turn around post the elections. Once you have a clear mandate to this government, then perhaps the continuity and the stability factor kicks in, and it's been a long overdue cycle. The corporate balance sheets are extremely, extremely healthy, and we should see a credit boom, and we should see a cycle of a private capex happening in this country. It's a matter of time. I think I'll kick in.
Now, Mr. Gorakshakar, any particular sector or theme that surprised you this year, both positively or negatively?
I think positively, I think clearly, I think the cement sector, the building product sector, and obviously, to a large extent, I think even the real estate sector. I think when we started the year, nobody could have imagined the kind of growth, kind of momentum in all these sectors. I think building product sector and cement sector has been largely been driven by the boom in affordable housing, in the real estate activity, and real estate as a sector has done remarkably well. In fact, my sense is that this has one sector which has emerged after a very long period of bear market for the last 10 years, and not only the bigger players like DLF or Realty, but even smaller players like Anantraj. Typically, companies which are focused in the Mumbai metro, the Gurgaon market, specifically in the tier 1, tier 2 kind of cities, have done remarkably well. And I think, this growth momentum will continue, considering the fact that even as of now, we've been talking to a lot of real estate companies, a lot of, cement companies. The mood in the market is very optimistic, and at least the third quarter is going to be pretty strong. Our sense is this rally will continue for the next at least 6 to 12 months ahead.
Mohit, same question for you. Anything that surprised you on both positive or negative side in 2023?
Look on the positive side, I think there were surprises galore, which is how the overall market has rallied, how the IPO boom has happened. I think these are all positive surprises. My sense is the biggest positive surprise to me has happened in the month of December with the FIIs returning to the market, almost 57,000 crore of buying in the market. That's a big surprise for me. And the way US yields have reversed from a 5% high to almost like 3.8, 3.7% now. I think these were very quick and prompt reversals in the market trends, and which has actually hugely positively surprised me. Negatively surprised, honestly, I've been negatively surprised with in terms of the geopolitical escalations and the longevity of those escalations. I was always hoping that even if that escalation happens, it would be like a month or at best a fortnight kind of a scenario. But both the geopolitical tensions have prolonged a long bit, and which still keeps markets on tiptoes. To be very honest, I think there is one eye always on those two tensions which are happening around, because anytime anything flares up, I think can be a negative trigger for the market. But otherwise, yes, I think it's all been hunky dory, and the markets have really cheered all the way along. It's the eighth consecutive year of markets giving you positive returns, and which is a record of a sort. And I hope we continue that in ninth year as well.
All right. Avinash, Mohit, please hold on with us. We'll be right back after a short break.
This was intended to be a terrorist spectacular without precedent.
The plan was to bomb two Air India passenger aircrafts simultaneously.
There was a loud explosion and the whole plane just vanished.
The police dropped the ball, the intelligence officers dropped the ball, and the politicians dropped the ball.
It was a conspiracy that destroyed my life. It destroyed 331 lives.
News is now content. Just stream it. Download the world's first news OTT, News 9 Plus, ahead of the curve.
Welcome back. You're watching First Take here on News 9, and markets have in fact slipped to the day's low. As we speak, Nifty 50 has in fact broken below the 21,700 mark. Currently, it hovers around the 21,690 mark, which is pretty much the day's low. Sensex has also given up around 170 points, and as of 10 a.m. this morning, Sensex was down 0.34% at 72,164 mark. Volatility has also hit the broader markets. They have been slipping in and out of green. Both indices, by the way, had scaled a new record high. In fact, now we have seen some bit of a profit booking from there on. Nifty mid-cap 100, which was flirting with 45,800 sort of levels, has given up some of those gains, and the small cap index is still holding above the 15,000 mark. But Avinash, coming to you now, January historically has been a weak month for us, and given the kind of returns that we have seen in November and December, do you expect some bit of a consolidation moving on for at least for the next couple of months?
No, I think you're right, Suresh, that there might be some consolidation in the month of January after a very strong month of December. But as I told you that, if the government announces its electoral campaign after the 22nd of January, which I think in all probability most market men are expecting, because the sentiment is very strong, and I think they would like to announce elections as fast as possible. So if this news obviously comes to the market, I think the market would actually greet this quite strongly. In case of consolidation, I would say that this would also be an earnings month. We could see the third quarter numbers coming out. So I think you'll see a lot of stock specific activity rather than the broader index based activity. I think because you will get to hear a lot of managements, commentaries from the top management guys, and I think that will be obviously related on a stock to stock specific basis level. So I would say that yes, the index may remain in a range, but you'll see a lot of stock specific activity because earnings numbers could actually give you a better insight as to what is expected, in the next 12 months, because possibly after the December quarter, most companies would be even giving their guidance for FY25 and so on. So I think it would be more stock specific rather than index based.
Now, Mohit, as Mr. Gorakshakar also rightly pointed out, earnings season is pretty much upon us. What are your broader expectations from the December quarter? You know, something that was missing in the previous two quarters was that demand, at least at the bottom of the pyramid, was lacking. Can we see a turnaround from here on, considering that, you know, December had the festive season and the wedding season?
Yes, I think Suyash, look, there are two things which everyone is kind of looking at, which is on rural demand, and which typically ties in with what you are saying, which is demand at the bottom of the pyramid. I think there has been a sluggish growth in the rural demand, but my sense is this quarter and the quarter coming, for two specific reasons. Once this has been a festive quarter through and through, and plus the great Indian wedding season was there with almost 38 lakh weddings happening in this season itself, right? So my sense is all this would have spurred on the demand, and we will get to see that in the numbers. My sense is it should start reflecting in the numbers, and plus the harvest also has been reasonable, the winter harvest. And second is the election campaign, which has been mentioned already in this show. I think with the election spending coming, it's always a boost to the rural demand. It's always a boost on the smaller towns and cities where a lot of this money gets spent in terms of promotions, in terms of publicity, in terms of freebies and other things. So my sense is that should give kick up to the rural demand, and which should again reflect in Q1 numbers. The Q1 calendar FY24 number, calendar 24 numbers, right? So both these factors put together, I think should give us positive surprise in the earnings.
All right. Now, Mr. Gorakshakar, with a view, you know, towards 2024, what sectors do you think can outperform next year? You know, this year was definitely the one for PSUs and realty stocks. What sectors can take the limelight in 2024?
Yeah, I think Swash, one needs to be a little contra when you talk about performance of sectors which have underperformed actually last year. We are positive on the agrochemical sector because we believe that, you know, last year the entire agrochemical sector underperformed because of high inventories in the system. But now, as of December, we have been talking to many agrochemical companies, and I think inventories in the system have more or less got completely neutralized. So the next year should be a very strong year for most of the larger agrochemical companies. We are positive on UPL, Sumitomo Corp, Rallis, which we believe are available at very attractive valuations as of now. And I think obviously in the tried and tested, sectors, we still continue to be positive on the commercial vehicle sector. We believe stocks like Tata Motors, Ashok Leyland, and obviously the ancillaries we supply to these companies are going to do extremely well because with the GDP growth of almost 6.5%, obviously economic growth is going to drive these companies. And of course, you can't ignore the railway and the defense, segments, which are tried and tested and again showing extremely strong demand. So I think these would be the sectors where the investor should keep a watch. Any decline in the market, any correction should be used as an opportunity to buy on declines.
All right. And Mohit, if you are to build a portfolio for the long term from scratch, and let's say you have rupees 10 lakh, what will be your strategy for 2024 and what will be on your shopping list?
Okay, so Suresh, look, honestly, I think I will tend more towards the large caps right now, the good big names in the market, though they haven't rallied much in last 2 to 3 years, honestly. And what we have seen in the market is a phenomenal mid and small cap kind of rally. So if someone is asking me to make a portfolio, I'll actually allocate 60% of my funds towards the big heavyweight names in the Nifty basket itself, basically because those are all tried and tested names. The bigger banks like HDFC, ICICI, they haven't done much. The bigger and plus one contra call, which I have always been mentioning on this show for last 2 3 times, which is the IT pack. My sense is in second half of 2024, the IT pack should start picking up as the rate cycle starts reversing. With the yields easing off in US, already we are seeing some momentum in the IT pack. So heavyweight ITs and continued with the mid cap IT names should reasonably do well. Plus, I also concur with the view that Some bit of steam is again left, though much of it has been taken off the table. But in the railway stocks and the defense stocks, where the smaller names are there in terms of ancillary and support services to these kind of things, I think that is one play which is still left in the market to some bit. And maybe first half of this year, we continue to see some momentum in the real estate sector, though it's a tricky sector to be in. But yes, I think the momentum is fairly strong out there.
And Mr. Gorakshakar, coming to you, what will be your, let's say, 2 to 3 top stock picks for 2024?
We consider real estate as a very strong opportunity. I think a company called Anant Raj from Gurgaon, we are very positive on this stock. Our sense is that the company has a very unique business model of data center and real estate. The data center business is one of the larger opportunities which we feel would play out over the next 12 to 18 months. So we have a target price of around 375 here. And on the large cap, I think we continue to be positive on the PSU banks, specifically Bank of Baroda and State Bank of India. SBI, we are looking at target price of around 740, 750 over the next 12 months.
All right. That's Mr. Avinash Gorakshakar of Profit Mart Securities and Mohit Gang of Moneyfront. Gentlemen, thank you for joining us on First Take here. Wishing you all a very, very happy new year to you and your family.
Thank you. Wishing you the same.
All right, but moving on, let's also look at how the markets are holding on, and in fact Nifty has climbed back above the 21,700 mark. It's pretty volatile, so we are pretty much trading in a range of about 5 points plus or minus around the 21,700 mark. But we are in fact off the day's high, and Sensex as we speak is down about 150 points or so at just above the 72,100 mark. The mid cap and the small cap indices both are seeing fair bit of volatility in today's trade, and the mid cap index is in the green above the 45,800 mark, whereas small cap index, which by the way is flattish, but it's still holding above the 15,000 level, which is something that will be a positive for the index. India VIX on the other hand is up about 0.2% as of 10:25 am at 15.17 sort of levels. But with that, it's a wrap on this edition of First Take. But stay tuned with us as we'll be right back with Business Plus on the other side.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, that US markets has slowed down.